Hey everyone, I thought I'd shoot a quick video today because of what has happened in the market today and the situation in the global markets as well. Uh, I was actually planning to take a week off, and I am still intending to do that, but I thought this was very important and I need to at least let people know what the situation is. Okay, so, quick thought on what has actually happened today. I was expecting the Nifty to hold the 14,350 area, which was the low of the month uh, for March, but it broke it very decisively today. It did recover in the afternoon. It went up to about 14,490 or so, and then it again crashed, went down to as low as 14,270. The low was 14,260 or so, and so there seems to be a lot of weakness in the market. It has come down from 15,400 all the way down to 14,300 or so right now. So, as of now, it is still a healthy correction, but the supports have been taken out. So, we're looking at possible supports at a few places, which I will right now show you. Now, if you were to look at this, you will see that a couple of things here. One is that this was the support, 14,350 or so, where we thought that the Nifty would hold, but it didn't hold that. It broke through decisively. And so now we are looking at a place where we could see the Nifty. Uh, okay, so there's a trend line here. Okay, this is one trend line we're looking at. It could go down to as low as 14,100, 14,050 in a couple of days, depending on the global cues, and I'll come back to that. And so that is one thing. The other one is that the February 1st budget candle. There's a huge green candle here. The low then on the previous day was at 13,596. So we're looking at 13,600, 13,700 as the next possible big support. And there is a possibility that it'll fill out. There was a gap up here on that Feb 1st, Feb 2nd, out breakout, and so that is something that it has filled it, and I hope that it will stop the downward trend. But what I'm seeing is one is that last yesterday FIS sold for 1,900 crores. Today they have sold for 3,383 crores. So that is not a very good indication. In fact, I've been telling you that if you look at the dollar strength, if you look at the DXY here, you will see that it's shooting up. Okay, it has broken out from a range. I'll show you the range. And this was a trend line. You can see this trend line going all the way to March 2020 when the pandemic wave hit. And from that time onwards, the dollar had been kind of weakening against other currencies. But now you can see that it has broken out of that downward trend. And so this is a bit of a concern. And you can see that from about 90, 91, it's broken out. It's again and again. So that is a danger. What this means, what does the dollar, currency index mean? Basically, it is the dollar versus a basket of six other currencies. And right now, when you see the number go up, it basically means that the dollar is stronger or people are buying dollars. What it means for us in India is basically that the dollar, people who have put in money into the Indian stock market, the foreign institution investors are taking money out. And when they take the money out, they have to buy dollars and take the money out of India, right? So that is what is happening. They're selling off and they're converting it into dollars, and they're taking the money out. As they convert into dollars, the demand for dollar increases, so the DXY goes up. And that's the challenge that we are seeing in India right now. So what can we do? The other thing is that the Nasdaq and obviously the Nasdaq has been weak for a while. So I'm not even thinking of looking at it right now. But if you look at it, this is the trend line we can see here, two supports here. Now it's breaking down. If it comes to say, so we obviously have our support here. We can look at 12,350 as a possible support. But there is a possibility that it would go down to as low as 12,000, okay, because the Nasdaq, which is basically the technology stocks, there are hugely overweight or overvalued. So they're going to probably get sold off quite well. That's one thing. Then if you look at the Dow Jones, which is the US uh, market as a whole, here we have another concern. Okay, here the concern is that again there is a bit of a breakdown, but the breakdown, where would it go? That's the thing. Right now, if you see, it has bound this support 31,900, 32,000, kind of bounced off from there. The low was 32,090. So that is that was a good bounce that we was good to see because it was going down very quickly. You look at the 15-minute chart, you understand this better. It kind of went down quite quickly from 4:30 onwards, and then it's been picking up. So that we still got to watch this. But the danger is that it's still weak, and if it continues down, we are going to look at a possible 31,600, 400 range where it can find the next. So overall, global markets are looking a little weak. The Nifty has taken out some important supports. Uh, if you look at the bank Nifty, there was this gap that it had to cover, and which it had covered. It's come down and found support here. You can see that there was a support of 32,500, 400, which is good. But if you look at the trend line, if this global market cues continue to go down, then we're looking at this breaking down even more to about 30,900, 30,000, 31,000 or so. Possible. It's not that it will, but there is a possibility. What's my main take here right now? My main take to people out there is that the free ride is over. Most of us have enjoyed from March 2020, a year ago when the pandemic came and the markets crashed. A lot of retail investors came into the market and they started buying stocks, and there's been a lot of the upward trend that has kept going on and on. We saw it from 7,600, it's gone all the way to 15,400. And this has been replicated in all the global markets as well. But the problem now is that there is a lot of there's a lot of uncertainty between the bond yields coming back up, inflation being an issue, and the second wave of coronavirus in India a possibility, the new strains that are coming out. So there's again a lot of uncertainty, and this uncertainty means that the market might consolidate in a range, and that might be a wide range. It might not break out and continue its upward trend. At the same time, you might not see stocks going in a particular direction. They might be going up one day, down one day, and it's going to be very difficult in this market. And people who enjoyed the ride till now, I'm telling you, you might not enjoy the ride in these next few months. I don't know how long this uncertainty period is, but we saw signs of it in Jan, Feb, and then onwards, and March. Both February and March have been highly volatile months so far. So my takeaway from this is that retail investors, got to be really careful now. One is you don't have the position strength to sometimes hold a share. What that means is right now you can see a lot of people are buying shares, and then a stop loss hits, they get out. They've lost that bit of capital, and then they're wondering what to do next. Maybe they're not in a place to continue to hold it. For example, a Rakesh Junjunwala, if the share is going down, he knows that at another support, when it breaks down a lot, he can buy some more because he's got enough capital for this. And retail investors like you and me might not be in a position to do that. My takeaway to you is that rather than trying to invest yourself, look to start investing into, say, a hedged mutual fund, or somewhere where they can properly manage your funds. Okay, and please, I'm seeing a lot of people throwing money away trying to learn how to be successful in the stock market. 95 to 98% of the people on the stock market never make money. And so if you are paying 25,000, 50,000 rupees to some guru out there who will teach you to be successful on the market, I'm telling you, you're going to lose money. as a test, like I mentioned in a few videos now. As a test, in the last 1 year, I paid someone 10,000 rupees to give me tips on what to buy, just as a test. Okay, it had nothing to do with the strategies that I was following, and I just tested it out. My total loss just following him has been 1.5 lakhs. And I can, if that is what's happening to me, I'm just following his cues. I can tell you that people out there are suffering a lot, including you and many people who are retail investors. So the key is to look at funds that are hedging, that are able to hedge themselves, or something like that, that will give you a proper return. And that's my takeaway right now. It is a very very uncertain phase that the stock market is going to go through, and if you are intending to make a lot of money, you probably won't make a lot of money. There's going to be a lot of stress involved, so I think it's safer to look for people who can handle it and accordingly invest with them also. I think it's very important that you figure out how to conserve your capital in this moment. All right.